Welcome to Agora Q&A, a production of Agoracom, in which we take the time to speak with small cap companies about questions provided by the shareholders so they can answer them via video. With us today, Dan Wasiluk. A lot of you've met him already. He's the CEO of Blockchain Foundry, trades in Canada under BCFN for our friends in the US, BLFDF. With him for the first time, going to be really exciting. The brains behind the operation, Jag Sidhu. He's the co-founder and CTO, Chief Technology Officer. So for those of you who are new to the story, let me do my brief intro. If you're a small cap investor who wants to participate in the current paradigm shift and long-term unstoppable trend of blockchain, cryptocurrency, tokens, and NFTs, what we wrap up in total as Web3, then look no further than Blockchain Foundry. It's a blockchain 2.0 company, I like to say, because remember what would happen to the small cap markets, blockchain 1.0, a lot of pretender companies. These guys are the real deal. I say they're one of the top three leaders in what we call Web3, which is the intersection of blockchain, crypto, tokens, and NFTs. Why do I say that? More than just lip service, revenue. 2020 ended approximately $1.4 million, and we're waiting for the final number for 2021, but we do know for the 9 months ended September 30th, they're at $892,000. But that's nowhere near where the story is going, because they're moving from a consulting practice to a product development and commercialization stage company. Look no further for great proof in that than there's Syscoin coin, which has a market cap ballpark right now of about $550 million, fully diluted about $750 million. And in any 24-hour period, trades between $25 and $35 million in 24 hours. They've got some great partnerships, the likes of Binance. They've launched their NFTgen and last known proprietary tools to help artists create and deploy and sell NFTs with great success. Here's just two. Cat Boudica, a 12,000 NFT collection, sold out in 10 hours, brought in about $4 million Canadian, give or take. And Chairman Ting's Billion Buns NFTs sold out in 48 seconds. Finally, House of Kiba deployed $6.2 million worth of NFTs in less than 40 minutes with the company. They're hitting out of the park. Guys, I know that's a long intro, but that's your fault because you're doing amazing stuff. Welcome to Q&A.
Thanks for having us on, George. It's always great being here.
Hey, love having you. And Jag, love having you for the first time because we're huge proponents of Web3. And we just think you guys are so comprehensive and so well-rounded that this is going to be really exciting. Before we get into some of the questions, let's talk a little bit about you guys just for a second. And there's two things I want to touch on: where you guys fit into Web3 and the latest good news out of Twitter and Facebook and the other social media platforms who are going to be incorporating NFTs for verification. But first, let's talk about, guys, where do you fit into Web3? What are your value stacks, your pillars?
Yeah, so Jag, do you want to speak a little to that one?
Yeah, sure. First of all, thanks for having me for the first time, and hello to the audience. I'll try to keep it as simple as possible, but our value stacks we see in Web 3.0, where users are keeping sovereign value themselves and likely intersects with the crypto market. The first important value, the most valuable thing, but the hardest to nail down as a speculator will be your layer one blockchain, like the Bitcoin blockchain, Ethereum blockchain. This is where most of the volume is going, right? If you get it wrong there, it's going to be easy to get it wrong. Some blockchains are going to be fly by night and they're not going to be worth too much in the long term, right? So if you get it right, you'll hit a home run here. The second part is the mining component, right? Like the Bitmain Industries, for example, $50 billion, but there's a new sort of mining composition of the sector market coming out where you have ASIC mining on the rollups as well. So we can get into what those are, but there's a new whole segment of mining opening up, which we're getting involved with. The third part is the dApps, right? You create your project, your AMM pools, and these sort of cool ideas of smart contracts.
Decentralized apps, by the way, for people watching, not sure what dApps mean.
Yeah, decentralized apps like decentralized finance pools and DeFi lending protocols and insurance protocols, a whole bunch of different things. These are worth a lot of money. It's harder to get wrong, easier to make some money, and you'll make a good amount of money if you choose anyone that's going to be around for the next few years. And the last one, which is the hardest to miss, but you make less money, is just a token, right? You have a token strategy where you're staking 5-10%, you're holding USDT, you're earning 5-7% in lending and borrowing, but you might have some speculative token as well, like Dogecoin or something cool that ends up exploding. You'll make money here. You may not make as much overall. In aggregate sum, these are the four pillars of investment in the crypto space.
Jag, are you guys focusing on one, some, or all of those pillars?
Yeah, so we got our hands in almost all those cookie jars, and we're part of all of those in some way, shape, or form, either in the research phase or in maturity. But in terms of the layer 1 blockchain, we have Syscoin. On the mining component, we're looking into snark-based mining and roll-up based validation. These sort of things are very new, but they're going to compete with the ASIC mining industry of Bitcoin, which is hundreds of billions of dollars. And then on the dApps, we are deploying our own versions on our own platform, our own products, which will earn revenue as more users come on, more volume opens up, we earn more. And on the token side, again, we own Sys, but there's other token strategies where if you do a dApp, usually there's a token involved in that as well.
Hey, Dan, a lot of non-Web3 expert investors, which I would say is 97% of the world right now, they see Web3 and they focus on headlines, which is some NFT sold for $1 million, some crypto like Shiba went up 5,000%. What is it they don't know about the structure that Web3 will bring and create new business models? Because this isn't a let's just hype stuff off and sell it at a higher price. There's real structure that's going to change business and the way business is done for forever, right?
Sure. Yeah. I mean, if you look at, I like to compare it to the Web 2 movement, where we went from everything being on the server side and lots of server side computation happening, fat websites that load slowly and don't work on mobile well at all, to now all websites are almost mobile first. They load quickly, they're small in their footprint. They put a lot of the code on the client side rather than the server side. That was like a general architectural movement that happened in the web development space, and colloquially referred to as Web 2. Web 3 is a similar type of migration where it's going to extend into all of the different channels that you are using in your daily life when interacting with the internet. And a big, what I like to say is like the major selling point of Web 3 is sovereignty of data. So you have a lot more control in a Web 3 world around what data you're exposing to different companies and websites that you're interacting with, and you have the ability to revoke that data. Whereas in today's Web 2 universe,
good luck revoking your
data.
data.
I mean, Apple made a whole feature out of this
Facebook
data privacy thing, right? Whereas in a Web 3 world, you have much more control over that. And you don't need Apple to, step in and say, okay, now we're going to do something for privacy. In a Web 3 world, privacy comes built in from the get-go.
And I'll tell you what I love about Web 3 in 30 seconds, and maybe you guys can correct me or not. But what I really love is that, we see this trend around the world about, because of centralized, let's take Tesla, for example, or Facebook, where the CEOs but I'm a capitalist, but they're worth $200-300 billion, and a lot of people just don't like that anymore. But there's been no real solution to how you make that more fair than tax somebody and hope an intermediary named the government can somehow efficiently spread that out. We know that doesn't work. What I love about Web3 is we can create a platform right now, the three of us, called Faceback, to compete against Facebook. Everybody participates. Everyone has their wallets attached to that. And based on their algorithms and how much activity and how many things, they actually get us, everyone spreads the wealth around.
Yeah.
And so it's really like the democratization of capitalism. So it still keeps capitalism. We don't damage it, but we just find a real good equitable distribution model. Am I overstating that as to what's really exciting about Web3?
No, you're spot on there. And I think the democratization of that data and that wealth is really a key point there. That's something that does not really exist in the Web2 space, and it can't exist because the Web2 space is not inherently backed by these, blockchain-based systems that really put the control back in the hands of users. It's all backed by like traditional centralized systems, right? That put all the control in the hands of the corporations. And then like, if you want to use that platform, like you want to use Facebook, you've got to play their game, but you don't have any alternative option, right? Your friends are all on Facebook. You're going to do whatever Facebook tells you need to do, or give them your address, your age, height, weight, street address, birth certificate, whereas in a Web3 world, you have a lot more optionality there, right?
Well, in a Web3 world, we might be the founders of this new Facebook alternative, but if we start doing things the community doesn't like and they start voting,
they can take over,
voting against stuff and say, hey, we don't like that you're doing that, so stop doing it, and we got to comply, right? Yeah. And that's what I really like about it.
And that's where properly structured DAOs, which are decentralized autonomous organizations, benefit a lot from the Web3 universe. A DAO is like a big decentralized company that is operated by the token holders, as George was saying, placing votes on different company strategic direction type decisions. And then the ultimate company implementing those decisions has to abide by what essentially the board votes to do, right? And so that's something
that before. We just never seen that before.
Right.
Well, in the traditional markets, corporations have been organic, and they've organically grown and died because of the life and death of the people inside of the companies, because of the thick layer of governance that is centralized, which is now the governance is becoming distributed. What you're going to see is new forms of companies that are going to survive much longer than the traditional, hockey stick curve where there's a cycle and then they just die over maybe a cycle of 50 to 100 years. You're going to see long-term companies get established because the governance is becoming distributed, and there's a thin layer of corporatism on top that decides direction based on what the equitable distribution is deciding where to go with the direction of that company.
And the last, and then now we're going to move into the Q&A, but the last, for people who still might be skeptical, guys, say, well, okay, it all sounds good, but it sounds really out there. We had big news this week out of the big social media platforms, Twitter, Facebook, and Instagram, which means others will follow, which is you can use your NFT that's verified on an NFT marketplace like OpenSea. You can use your NFT to verify your identity on those platforms.
Yeah.
So that's the first real world for the masses, I think, kind of incursion we've seen of Web3 into our lives. What does that do to legitimize, Blockchain Foundry? Not that you needed legitimacy, but to even further legitimize in the eyes of the masses, in the eyes of people who weren't taking the blockchain world seriously up until this point.
I think that it all boils down to seeing large corporate organizations that people do sort of view as successful and thought leaders in that respect, starting to adopt Web3 within their core products. And what Twitter has done with, I think they call it Twitter Blue, where if you spend $3 a month, you can link your, like you're saying, you can link your blockchain validated NFT to your profile picture, so that only you can use that as your profile picture in a validated way. Other people can try to copy it, but it's clear that it's a copy. That Twitter investing in putting development resources into a feature like that just shows that it's the tip of the iceberg when it comes to all the different stuff that's going to stem from that. Now that Twitter is connecting with your wallet, there's all kinds of different stuff they can start to roll out feature-wise.
It opens up limitless possibilities, right? Damn, literally limitless at that point.
Right, and the value to a player like Blockchain Foundry is that this is the type of technology use case we've been advocating for the past 3-4 years now. And so, we're not as big as Twitter or Facebook, right? So the fact that we're advocating for it sometimes falls on deaf ears, but now seeing big thought leaders like Twitter and Facebook make real actionable steps into implementing the technology in their core products starts to change how people perceive the direction that Blockchain Foundry is headed in. And, maybe before they thought that that would never happen. And there's no way that we're all going to switch to decentralized anything. And all of a sudden, Facebook and Twitter are proving them wrong, right? And we've seen that coming for a while, but it just goes to show that we have some level of foresight into how the market may evolve around these technology components that we work with every day. And Twitter and Facebook's move to incorporate Web3 into their core products is just a testament to that.
Yeah, that excited me and anybody following Blockchain Foundry. If you're sitting on the fence, not sure about whether Web3 was going to make it into our lives, the biggest platforms the world just told you it's coming into your lives. So with that, sorry, Dave, last word.
Wait till they implement decentralized identity. I think that's the next thing that we'll see on those types of platforms, where if you go to identity.foundation, you can learn more about decentralized identifiers and decentralized identity. But at its core, it's having control over what data you share with platforms, and then your ability to revoke the sharing of that data. And so right now, where Twitter might ask you for your first name, your last name, your email address, in a decentralized identity context, you would have to approve the sharing of that data through your wallet with Twitter. And then they can show, your first name, last name, email. You don't got to type it all in. And then if for some reason Twitter starts doing things you don't like, you could revoke the sharing of that data so that they can no longer utilize it, and it's back within, your control.
Exciting stuff, man. Really exciting. And that's why I'm excited for Blockchain Foundry. So let's get to some of the questions. The first set of questions comes from Alexandru Pop. 3 questions there. Hey, Dan, I'm going to move backwards from 3 to 2 to 1 because the number 1 is really, really specific, whereas number 3 is a little more, So first question, what are Blockchain Foundry's intentions for 2022?
So for 2022, what we're really focusing on is pivoting from our traditional business model, which has been a consulting practice, to something that's more product-based. As we've gotten more experience and exposure in the blockchain world, we've started to identify some inefficiencies with the consulting model. When you go after like a blockchain agnostic consulting model, there are very specific things that you need to know about different blockchains to efficiently move between them. And that starts to get very onerous on developers when you're trying to have like a team that can work on this project on Ethereum, let's say, and then that same team being able to move and work on a project on like Avalanche or Binance Smart Chain.
Yeah.
The list keeps going. Solana, Phantom, Polygon, Syscoin, they're all, right? And they're all similar, but they have their differences, right? It's not like you can just take a team that works on Ethereum and drop them onto Phantom and it's going to be one-to-one. There are going to be little nuances that you got to be aware of when you're working like that. And so as we got into more consulting engagements, we realized the inefficiencies of that model. And so in 2022, we're shifting towards more of a product model, kind of like a SaaS-based model within those products. And we still want to provide consulting services to clients, but more focusing those consulting opportunities on really large enterprise clients that can really make a difference for us when it comes to revenue numbers, rather than like, small startups who want to just do a little project on Binance Smart Chain. Like they can go, there are other providers for that scale of project. And then having products that generate a recurring stream of revenue for the company. Last Known's the first one. Peregrine's another one that people have seen, and then offering professional services within those products, so that if there is some like a corporation really likes what we're doing with Last Known, but they want a specific tweak for a brand page within Last Known, we can sell them professional services that allow us to add that feature, and then they would still use Last Known as a platform, but basically have subsidized the costs of adding new features to the platform and through our professional services offering.
So you're providing the consulting, but you're also saying, okay, we'll use as much as we can. We use our products to solve your problem, and right. I think that's ingenious. But on the product side, you've been having tremendous success, right, Dan? I mean, just with Last Known, you've had a couple of great NFT sellouts just in the last 30 days or so. So
yeah, I mean, both Last Known and NFTgen, which is a technology pipeline we have for not only some of the things we offer through Last Known, but also some of the things we offer in our consulting practice. And standardizing some of the offerings within our consulting practice, right? NFTgen allows us to help projects operationalize an NFT roadmap very quickly, regardless of blockchain. As long as it's got a Solidity-based EVM in it, we can use NFTgen with it. Cat Boudica used NFTgen. House of Kiba used NFTgen.
Great success.
Huge success. I mean, Cat Boudica is incredible art. It's rock star team of creatives behind it, but the NFT marketplace that we're operating in today is very different than the one we were operating in just 6 months ago, right? It's a lot more saturated. There's way more projects. It's much harder to stand out. And so, I was a bit unsure if they would meet the targets that they had for 12,000 tokens, a lot of tokens in today's market, right? And to see that they've really crushed it on the marketing front, and then our technology pipeline enabled them to bring that offering to market in a effective and secure way. Like the smart contracts that we use for this stuff have been pretty significantly hardened at this point. Like we've done it with multiple projects and continue to improve those smart contracts. And so to see that success on the consulting side using sort of a standardized technology pipeline is awesome. But then also within Last Known, which is really a curated NFT marketplace for
real quality NFTs, not just somebody who wants to just, hey, I want to get George Bucks, George Land NFTs, Dan, make me rich. Like
I'm going to take all the
Bored somewhere else for that.
Did you see the guy who took all the Bored Apes and he just flipped them 180 and then launched them as a collection on OpenSea, and it was making like millions of dollars, and then OpenSea had to like step in and shut them down because
I think right facing or something like that.
Yeah. All he did was rotate it, and then he just launched it. So you won't find anything like that on Last Known. Everything on Last Known is unique to Last Known, and what we have coming up as like a next feature set for Last Known is making it so that there's a secondary market on Last Known for these NFTs, but the only items you'll see in Last Known secondary market are tokens that were minted through Last Known. And that's really big to artists and content creators because they see their work on OpenSea next to George Bucks and a picture of Dan's couch that he decided to turn into an NFT, and it actually erodes their brand, right? So they have a concern there that they've spent the last 20 years building themselves up as this major artist, and now all of a sudden their stuff is next to pictures of couches and George Bucks, and that erodes their brand, right? And so as we onboard artists to Last Known, they have confidence in the platform, knowing that it's always going to be a curated platform. There's never going to be an opportunity for someone to come in and take a picture of their couch and post it as something on the secondary market. It's only going to be things that were minted through Last Known that show up on the secondary market.
And even, by the way, even for people who are looking for NFTs for
right.
On our side,
I'm
not going to be someone on Last Known, not George Cholas anyways, maybe a Gorcon will, but not George Cholas. But if I'm looking for quality NFTs because I want to get into the space and buy some great digital artwork, and OpenSea, I'm scrolling, I'm seeing couches and George Bucks, but at least I go to Last Known, I go, okay, these are established artists. So safe to say, Dan, the word is getting out in the in the established artist world about Last Known.
Yeah. Oh yeah. We have more inbound interest from content creators than we can service efficiently right now.
That's great.
We've only revealed like one or two of the artists that we're working with publicly, but we are working with a lot more behind the scenes that we'll share more about in short order. But yeah, I mean, especially as we already had a large pipeline of content creators before we launched the first collection, Carson's Billion Buns. Then after that did so well, everybody started contacting us and wanting to do collections and doing them ASAP, but we've already got, more than 10 that we're working with. And so we've had to be, we've had to curate, right. And choose the ones that are closest.
Curation.
Right. And so
by the way, you guys, Jag, you guys will be able to solve that problem in the future, because one challenge in the Web3 world, and I'm going kind of off script here, but I remember Web 1, back then we looked, can anybody build a website? Anyone know how to build a website? And for the first couple of years, only a small group of people, there's way more demand than supply.
Right.
But, Jag, because you're the CTO, so you must run into this problem as well when you're looking for great people and you're competing against, How long do you think it'll take for way more developers to graduate, to skill up, and then, where we come to an equilibrium like we did with Web 1, where there's tens of thousands of people that could build your website?
Well, it takes 10 years to become a pro at anything, right? And so the market just hasn't been enough, hasn't had enough time for people to become experts to teach others. But now you're seeing research and university and certificates opening up where people are becoming established experts and learning from others to become experts. And so developers, they need to understand the full value stack. Sometimes if you're going university, you need to understand the full picture. If you're just looking for a job in NFT space, you just need to understand smart contracts and how to launch those. So having understood the bigger picture, you're able to become a better creator because you know where to plug in and what the future might look like and where you should be developing and what sort of tools you should be using for future proofing your value. So I think it's, since the industry is barely 10, 11, 12 years old, I would expect this next 3 to 4 years to be really huge, where the average developer it's in their tool, it's in their arsenal, and they could, just like they know C++ and JavaScript, they'll know Solidity and smart contract design patterns and NFT design patterns.
Well, and I think another challenge there is there is still a lot of technology maturity going on within the blockchain space. Like there are lots of monolithic blockchains that are making big promises around their performance and scalability. But as soon as those blockchains start to experience the level of user growth and traction that a blockchain like Ethereum has experienced,
right,
those claims really get put to the test. And in a lot of cases, those claims fall on their face. I mean, look at Solana. It's gone down 3 or 4 times in the last 2 or 3 months. But they're supposed to be the most scalable, awesome blockchain, right? The proof is in the pudding in that case, right? That's where Blockchain Foundry and the Syscoin protocol, which it contributes to significantly, is really working to get ahead of the curve. Syscoin is evolving from a monolithic blockchain to a modular blockchain, where there's a base chain that secures all the value, but then there are other tiers that enable greater scalability at lower costs. And so that's another wrinkle in the blockchain space that makes it such that that complicates the path for anyone becoming an expert, in the normal amount of time, because you become an expert on monolithic blockchains in layer 1, and then a year later, everybody's like, those are trash. You got to learn modular blockchains and zero knowledge rollups.
And it is moving fast, right? So it's incredible. There's great things about things moving fast, and that's the downside to things.
Right. But what's great about working with someone like Jag is that he has a lot of foresight and respect to that kind of stuff, right? And so we as a company don't end up overly investing in a monolithic layer 1 implementation, because people like Jag have the foresight to see that this really isn't going to work. It doesn't matter how much you throw at it. Maybe if you centralize it through a series of validators, you can get more performance on layer 1, but really the solution to scalability and cost is a modular blockchain that has additional layers that allow for that scale and speed. And that's how Blockchain Foundry has contributed to Syscoin development in evolving it, right, from a monolithic blockchain to a modular blockchain starting this year.
And that kind of makes sense, because that's blockchain, blocks, modular. It seems to that seems to make sense as just a philosophy. Yep. The other question from Alexandru was, last year, Blockchain Foundry had a partnership with a large Canadian financial institution. I think you had said to the market there's like a $400,000 agreement there. Is there any more development on that direction?
We are eager to continue working on that direction. Unfortunately, the impacts of COVID to this specific Canadian financial institution have been pretty material. Like literally all of the team we had worked with just 6 to 8 months ago have all been replaced or left the company. And so they are scrambling for developers just to internally get back to where they used to be. And then once they're at that level, they want to engage with us again. And the good news, though, is that the product that we help them to develop and get to kind of like a pilot stage has had incredible feedback from the organizations that they've started to talk to in regards to it. And so they have more interest than they can handle in respect to the offering we help them to develop. The challenge that they have is now they have no staff, and they need, even when we work with them, they had like 20 people internally on staff just on the project we were working on. But having those people all gone, they got to staff up again and then start working with us once they're at that point.
I didn't realize that COVID had that kind of impact.
Yeah, some people like can't, working from home is challenging for some people, right? I mean, it takes a lot of self-discipline and it's a different way of working, remote. Some people really thrive off of the social interaction that you get in an office. A lot of people at BCF are more like technologists, so we're all like heads down, like don't bother me, let me do my code. So the lack of an office sometimes, has its perks, and that you sometimes can focus more. You don't have people coming around talking about the TPS reports or whatever. At the same time, you lose.
I know that reference. I don't know how many people know that reference, but I know that reference.
Yeah, Office Space. If people in the crowd haven't seen it, it's a great movie. But that has its benefits, also has its downsides. It makes it harder to create cohesion as a team without having people all together in one space. But we're watching the way that situation is evolving, right? And we have plans to get back into an office space as soon as it makes sense. We still think there's a little bit of risk out there with the variants of COVID that are floating around. And so continuing to sort of monitor the status.
But the great news is great success for that Canadian financial institution. They're ready to scale up and do a lot more with you, and kind of fitting into what you said earlier, which is if you're going to take on consulting and project, you want really big projects. So this could become a really big project for you.
Yeah, they fit into that echelon of organizations that are of the enterprise size that we would want to work with to continue doing consulting work. They were great to work with, and the product we helped them develop was one that we had our own ideas about too, but we just aren't the big giant like they are to get people as pumped up about it as they can, right? It's when a financial institution brings a paradigm shifting technology to the table, everybody pays attention. When a small startup brings a paradigm shifting technology to the table, everybody says, well, call me one that's been proven, and you're like, well. So
at what point do you think we might find out the identity? Because even I don't know who it is, but is there a point where the identity of the large Canadian financial institution might become public?
I think so. They've talked about publishing it sort of in the context of a subsidiary of their larger organization, so that the organization that we worked with might be focused more on like the innovative, cutting edge labs type projects, but it falls under the larger parent umbrella of a brand name that lots of people are familiar with.
All right. And last question. Now, this one gets more specific. So it went from BCF, blockchain intentions, to a specific client, and now to a specific product, which is, can you share some updates about the Peregrine development? And will that be a pay-to-use service, white label, or will it be open source? And by the way, before you guys answer that, just 30 seconds, because a lot of us don't know what is Peregrine before you answer that.
Yep. So Peregrine is a platform for regulatory compliant digital assets. Right now, a lot of the brokers and issuers in the space are facing headwinds from regulatory bodies. The regulatory bodies haven't really started cracking down on them yet, but we foresee that coming in the very near future. Bitfinex with its offering of USDT and saying it's backed by however many hundreds of millions of dollars in their bank accounts. They're going to have to put a little bit more reporting, reporting behind that to prove that money actually exists in their bank accounts, but also things like making sure that those types of securities don't fall into the hands of terrorists or blacklisted addresses or like North Korea, those types of bad actors. There is a very weak system currently in place for trying to enforce that kind of thing. What Peregrine offers to regulators and to issuers, broker dealers, all the folks that kind of play in that pool, is a standardized set of tooling that regulators can sign off on, so that when they come to audit a specific organization's issuances or digital asset offerings, they're able to very quickly determine that that organization is on side with all of the regulatory requirements based on the different jurisdictions that they're issuing those assets in, or not. And that compliance is rooted onto the blockchain, so that if the organization was not compliant for the past 3 months, and then they hear the regulators coming in to audit them, they can't go in and manipulate the database to make it seem like they were compliant, because there's blockchain evidence. Yeah, the blockchain will show the regulator that the database has been tampered with, and then that organization is probably in for some.
So Peregrine on its own could be a massive standalone product.
We think so, yeah, and we already are working with pilot customers for what I'd call Peregrine 1.0, which is very much focused just on value transfer, and making sure that the value transfer is happening in a regulatory compliant way, and there's a simple system for regulators to come in and audit that behavior. Peregrine 2.0 is something that we're developing on the back of our contributions to moving Syscoin protocol to being more of a modular blockchain than a monolithic blockchain. And so as Syscoin development moves forward and zero knowledge rollups are released on the Syscoin platform, we'll be able to release Peregrine 2.0, which will actually allow not only the regulatory controls on top of value transfer, but also regulatory controls on top of DeFi smart contract type operations, right? So these automated market makers, these farms and lending pools now can also have the same sorts of strong regulatory enforcement that Peregrine 1.0 enables on the base token value transfer level, but extending that right to a bunch of different domains that regulators are also going to need tooling within.
Man, and for everyone at home, even if you don't completely understand everything Dan said, because there's some nuance there that are new to everybody, you pretty much understand the big picture of what he's saying, and that's exciting. And by the way, Dan, the second part of that question, is that going to be a pay-to-use service or open source? I'm assuming you want to make money off it, but
yeah, pay to use.
Pardon me. I'm going to mute here while you talk so I can sneeze.
Oh, good, because in height. Definitely pay to use, and it is the vision for it is a white label self-service SaaS platform, so that myself, as someone wanting to issue Dan coin in a few states in the United States and 3 provinces in Canada, I can purchase a license to Peregrine. I can say, okay, Dan coin's the coin I'm going to be issuing. Here are the jurisdictions that I'm issuing it in. We already have built-in rule sets for those jurisdictions. We've been working with lawyers and regulators to understand the different rule sets for the different provinces and things like that. And so you'll be able to say that you're issuing in Ontario. And so Ontario might require KYC, FATF blacklist compliance, all these different things. That's all preloaded. So as soon as you check Ontario, the rules show up. And if you're like, oh, well, for whatever reason, we're not going to be doing the KYC, you can just uncheck that rule and the rest of the rules can be applied and you can just go, right? And then when the OSC calls you up and they say, hey, we need to look at how you're issuing this token because you're issuing in Ontario and we govern issuances in Ontario, there's actually a regulator role within the Peregrine system. It's read-only, so it's not like the regulator can modify anything, but it gives regulators a direct touch point with the platform to audit what's been happening there on behalf of the issuer and either sign off on it as being on side or have all of the tools to unearth any kind of foul play that might be happening, like I described with the database manipulation scenario earlier.
And how much success have you had with the regulators so far, introducing it to them and saying, hey guys, we're gonna be selling this to George at Agoracom and all these other people, but we need you as the other part of this to kind of accept. They don't need to accept, but to make it a lot better. How do you see how's the response been from regulators?
So far, the response has been fantastic. I mean, the major point that has been reiterated to us by regulators is that they don't issue a no action or like a blessing for just technology. It's always technology in combination with an issuer. And so that's where, okay, cool, we got you. So now we've gone back to the pilot customers that we're working with and getting them set up on the platform so that we can then go back to regulators and say, okay, now I got the technology, we've got an issuer, can you guys sign off on this? And once we get that sign off, we'll be making noise about it because there's no other platform like that, right? And so BCF having a platform like that regulators sign off on. We are focusing on North America to start, United States and Canada.
Yeah, that makes sense, right?
And then expanding from there. But if we can get sign off from regulators in those jurisdictions, then
you don't go around the world like that because
Yeah.
everybody's watching, right?
Right, exactly.
All right. Well, we'll look for more news on that because I love that product because it's so key to unlocking so much of this market where the business side can say, all right, we'll incorporate Peregrine because the regulators are using it and we can comply, and then we don't have to go through these massive delays, and because it's a mess right now. Let's just say I think it's a mess, and Peregrine could literally shut that vacuum, clean it up. So
and what's interesting too, in terms of opportunity for BCF there is like, look, BCF is investing in the Syscoin technology space, and we hold some Syscoin on our books. And we believe that as regulators start to crack down on other platforms that don't have systems like Peregrine to enforce regulatory compliance, that liquidity is going to move to blockchains that can scale and can be regulatory, can have regulatory enforcement actions on top. And so where a regulator might shut down USDT on Ethereum because they don't have anything like Peregrine and the regulatory controls it provides, USDT can come right over onto Syscoin because we have all of the EVM and all that stuff that they need to deploy the same token without any modification to the code. And then they buy a license to Peregrine, they snap USDT into there, they apply all the rules that go to the different jurisdictions they issue USDT in, and they're off and running. And now regulators are happy with the way they're doing things, and that organization can continue to function as an organization, right? Without something like Peregrine, if people shut these things down on other blockchains that don't have these types of tight regulatory control offerings, then what is the issuer going to do? You know, like there's nowhere for Bitfinex to go with USDT. Like places like Stellar have started to talk about something similar to what we've already gotten, I think, ahead on. But, you know, we're way ahead in that respect. And so we're going to push real hard to get sign off from these regulators so that as those regulators crack down on issuers on other chains, we say, come on down, the water's fine. Regulators are cool with our blockchain and the tooling that we've developed to provide them, you know, assurances that you're on side with your issuance.
And man, that would open up a floodgate, I think.
And it would do a lot for Syscoin's value too, right? Because just think about if, you know, the level of transactionality that comes with USDT all moved to the Syscoin blockchain one day. It would be crazy.
I can't imagine that, but I can see how it's possible.
Yeah.
Jag, let's talk about looking forward, because the next set of questions from Ibby do a good job of that. I'm going to ask you a question about ZK rollups, but 99% of people in the world don't know what that is. So before I ask you the question, can you kind of talk to everybody in as much techno dumb language possible? Not that we are, but no one compares to you. What are ZK rollups and why are they significant?
Yeah, I mean, the simple explanation is just a black box. It's a black box where you're able to do transactions without leaking any information. You're able to combine transactions without leaking information. How do you scale up databases? How do you scale up any financial system? If you can avoid having to check every transaction, like if I'm the Visa company processing credit card transactions, and you could combine the transactions into chunks, and then you verify the chunks, you know, you can see how it's more scalable, right? But the only way to combine those chunks is through zero knowledge proofs, which is a new mathematical concept. Instead of having validators around the world form some sort of consensus that, yeah, these guys have been checked and we have fiber connections to each other, so doing it really fast, like probably how Visa is doing it or MasterCard. Instead, you can have one single server doing this work. And the work here is to just take the transactions, combine the chunk, send that off to the blockchain, get a stamp of approval, and then you've processed that state. Now you're working on the next chunk. So
that almost sounds too big to be true, but it's happening, right?
Yeah,
we're moving toward that. This is beyond conceptual stage, right, Jag?
This is the direction the whole industry is inevitably heading towards. The math has been around for 20 years, but it hasn't been efficient enough to be applied. It was mainly used for privacy, but with blockchain, it can be used for scalability because you're aggregating information pretty much. Anytime you get to aggregate, you save either the cost to move information or compute information. We solve both of those problems. So you can, as I was saying, the mining component before, the layer 2 of the value stacks, mining component intersects with this zero knowledge stuff, because sometimes you need specialized hardware to make sure that you can compute this stuff faster. Just like a bigger CPU can process more information, a specialized software and hardware can compute more and earn you more money as someone who's running that hardware to extract value out of those systems. So now I have the ability to scale up in the recent years, so I can actually approve these transactions in real time. We're getting to benchmarks of thousands of transactions per second now. And as hardware optimizations come, we'll get to tens of thousands, and in the future, we'll do much more. And the fact that each of these systems could be running in parallel means that there's no communication complexity between them. So it becomes massively parallel. And this whole space is about to explode because of that.
Now let's get to the question. So awesome explanation, by the way. That was great. And I appreciate you, really using much layman language there as possible without making it sound like too basic. So I think that was perfect. Here's the question. With Blockchain Foundry and Syscoin being at the forefront of development of ZK rollups, zero knowledge rollups, and completion schedule for Q1. By the way, we'll talk about both of those as assumptions. It seems like the final gear to the cogwheel unlocking the ability to provide scalable, efficient, and secure blockchain products at the highest level. So in answering that question, Jag, is Blockchain Foundry and Syscoin at the forefront? Are you looking to complete the complete schedule for Q1? And is it the final gear to the cogwheel unlocking, at the highest level?
I would say we are uniquely positioned, knowledge experts, a group of there's only a handful of groups in the world that probably understand to the level that we do, because we've been in the space for so long, with our heads down on the research side. So because we have that advantage, like you were saying, how long will it take developers and academia to catch up? We've got such a head start to understand the different nuances of decentralized systems that even if you know what ZKP is, you have to marry it with the game theory of decentralized computation, of the security of the blockchain, of inflation-resistant mining mechanisms like Bitcoin, with real energy behind it. So if you come from a new background and you just learned about blockchain and you're a super smart individual, 200 IQ, you probably end up designing something where it's similar to what Ethereum is going towards, where you're deciding, no, you know what, we can't scale the way Bitcoin's doing things. Let's try it a different way. And that is a dangerous slippery slope, because if you go that direction, there's untold number of attack vectors that can come, black swan events, like black swan events in the markets. The problem with this stuff is these are consensus systems. They're supposed to be left untouched because of the decentralized aspect. If you're supposed to leave this stuff untouched, this means it's got to handle all adverse cases of events, meaning no black swan should be possible. If a black swan is possible, then there's not much value in such systems like a blockchain. It's not like a typical centralized database. It's supposed to be something where anyone can trust value, walk away 100 years, come back, the value is left untouched. If it could break and in 20 years and you come back and you're like, my value's gone, there's not much value. There's no difference. You might as well store it on Facebook or Google Cloud and be done. This is where instead of putting a lot of the stuff on the layer one side of the blockchain, like stuffing it right into Bitcoin, stuffing it right into Ethereum, we have these mathematical solutions now where we can offload a lot of this load and still not suffer those potential black swan events. And when we look through our lens, we look through the lens of decentralization, of being black swan friendly, inflation resistant, making sure all of the vectors of attack, we assume that the Bitcoin model has been protected from that, and we build from there logically and through academic models. And we don't try to make new assumptions of vastly new settlement designs. So if we make that assumption that things are secure today, we're just going to build on top, then you can see how slowly but surely we've completed that trilemma, the security, the decentralization, privacy, and scale, all wrapped up into one ball. It hasn't been priced in because this is a lot of information that just the market just doesn't understand yet, and we need to prove ourselves by putting it out there. But once that's done, you're going to see, not only just for us, we're talking about the entire industry. We're all moving towards the same direction, but specifically for us, we are highly focused on the security and decentralization aspect.
Jag, one of these days I want to take a scan of your brain and my brain and just see, I think a lot, and I think I do deep thinking a lot, and I feel like a famous line from Breaking Bad. It's grade 4 T-ball versus the New York Yankees. It's amazing. This to speak is pretty incredible. Next question, guys, is from maybe, will Blockchain Foundry develop its own? And by the way, let me start with the end. They said, this is a wide-netted question in hopes of pinpointing the next product that you guys are excited about. And so the question is, will you guys develop your own DeFi ecosystem for products like a decentralized exchange, fractionalized NFT services, et cetera, and so on, knowing that these companies need safe and compliant exposure?
Yes. One thing that we're currently looking very seriously into is developing some of these DeFi products that are mentioned here. I'm not going to name the exact one, but one that we feel will generate significant revenue for BCF as referred to as TVL in the DeFi space. It stands for total value locked. But we believe that as we bring these products to the market, we can increase the amount of TVL on Syscoin. And as you get TVL within a specific DeFi product, you also generate more revenue from that product. And how we are differentiating DeFi offerings we'll be bringing to the market from others is obviously our position as a publicly traded Canadian company, right? We believe that we can provide a lot more transparency and security assurances to users than a anonymous group of developers from somewhere on the other side of the planet. Right?
Yeah, that's just inherent, right? You're a public company, fully disclosed. You're fully doxed, which is
right.
Industry speak.
So we're definitely looking into that stuff, and we're looking to be first to market with some of those offerings on the Syscoin chain. Now that Syscoin is evolved into a smart chain and will be further evolving into a modular chain. And so we're looking at not only providing those DeFi those DeFi type offerings at the layer 1 sort of blockchain level, which has the typical scale and cost considerations, but really we're looking to offer them on layer 2, the zero knowledge rollup stuff Jag was talking about, so that users can transact within those systems at huge levels of scale with almost free transactions and almost instant transactions. Whereas on layer 1, you'll never get there with that many users.
I want to ask a follow-up, my own follow-up to that question on one specific potential application that it be mentioned, which is fractional NFT services. I've always been fascinated with that. Our family owns a couple of apes, but those are really getting up there in value. We know there are a lot of people in the world who would like to own apes or other NFTs. Mm-hmm. But that's how many people can lay out that much money for one NFT? Right. Is fractional NFT services something, guys, that's realistic, generally speaking, and could that be a product that you guys might be focusing on in the future?
I wouldn't say it's the first thing we're focusing on. I think there are much larger opportunities in the DeFi space that have been proven on other blockchains to be, quote unquote, money makers, generate real revenue. Fractional NFT services may come into their own as something like that, but we think there's a lot more revenue potential in some other directions that we can explore there first. My ethos on it is kind of like, I would love BCF to build as much DeFi ecosystem infrastructure on Syscoin as possible, so that we can offer not only, a potential exchange, but also potentially fractionalized NFT services, stablecoin services, lending and staking, all of those things, but prioritized in a way that moves from highest revenue potential to lowest revenue potential. I've seen things in the DeFi space that I know will generate more revenue than fractional NFT services. It's not to say we won't do them. It's just to say we'll probably do them further down the roadmap than we would some other things.
And that makes sense. I guess fractional NFT is one thing that a lot of people probably think about, because I see it mentioned all the time on social media, where people, hey, let's buy an ape, let's buy a punk, but let's team up and do it, and they got
and I think there's totally value there, right? Because like you're saying, very few people have enough money to buy that on their own, right? And teaming up with people is difficult without some smart contract wrapping that agreement between all the people, because otherwise, Joe and Bob put in their money, but then Tim doesn't put his money in, and now you can't buy the thing. And then also, how do you lock the NFT that you're fractionalizing? All of that stuff can be controlled through smart contracts. That's the right way to do it in my mind. And that's how we would do it, when we get to that part of our roadmap. Kind of.
I would say one of the exciting things about fractional NFTs are the intersection between compliant NFTs or securities and our compliant solutions, right? Like, for example, real estate tokenization, which is fractionalized NFTs most likely. You have a building and separate rooms are sold. Even part of your flat is fractionalized inside of the entire NFT. So fractions of fractions. You can do these sorts of things, but you open up the door to securities regulations and compliance. But this sort of thing could live on a compliant Web3 platform done in a standard way. So that's, I think, where fractional NFTs will get really interesting. Not just lowering the barrier of entry on a cost perspective, but opening up the utility can of worms to create a whole bunch of use cases. So you're lowering the barrier of entry into a really big market, such as real estate, for example.
Yeah, and that's exciting for me. I got to tell you, to see that when that comes to fruition one day. So we don't need to do deeper dive on that, but it just lends even more validation to small cap investors. I know Web3 people, they know what you're doing and they love what you're doing, but things that, big moves like that, big industry paradigm shifts like that are what excite me about the future of NFTs. So I'm glad we got a chance to talk about that. So next one is taking the question above into consideration and understand that you guys are network agnostic as a blockchain development company. Does Blockchain Foundry still play sort of a parent role to Syscoin, where larger enterprises would look to utilize the Syscoin platform and Blockchain Foundry products instead of a DeFi product built on Syscoin from a third party?
Yeah, totally. And that's our perspective on it too, right? Is that as we roll these products out, being a publicly traded Canadian company with all of the transparency that's required of that sort of role, we would, it just will make natural sense for companies to work with us so that they have those, especially if they're talking about large amounts of liquidity. So they have the confidence in the platform to deploy their liquidity on it. And if anything goes wrong or they have questions, they know that we have a dedicated support team for all that kind of stuff. And it's not just like, two guys in a basement that deployed a smart contract. And then if things go wrong, no one's there to answer the phone kind of thing. So we do play a somewhat parent role to Syscoin in that way. We are constantly trying to diversify the pool of contributors to Syscoin though. Like, while we do play a large development role in Syscoin's evolution, that's not to say that we're playing that role because we don't want other developers to contribute. We want other developers to contribute, and we're seeing more of that now that Syscoin has become a smart chain. And I think that'll continue to grow as it becomes a modular chain. But in the absence of other developers contributing, BCF is there utilizing grants from the masternode network on Syscoin to help move it forward and get the ball down the field, because Peregrine is developed on top of Syscoin, utilizing features that only Syscoin has. And so there is a sort of symbiotic relationship between BCF and Syscoin in that way. BCF implements features in Syscoin that we know will complement products Blockchain Foundry is trying to bring to market. As the pool of developers contributing to Syscoin grows and diversifies, there'll be more mind share in features that go into the platform. We'll still be looking to make sure that the features are there to support product directions that we've already mapped out, but we certainly are trying to grow the sort of brain trust that informs the direction and evolution of Syscoin.
Next question. You've been developing a wallet for BCF products and the Syscoin ecosystem. What's the new progress that you can share with us? What's the update? Where are you guys at with that?
So that product is actually pretty far down the path. We've had to sort of pause it temporarily to focus on last known, and that's been with good reason. Like we sold out Carson's collection in 48 seconds. Yep. BCF generates material revenue off of each of these mintings. And then of course, focusing on Capbotica as well. So we will be unshelving the wallet product in short order. And the goal of that product is just like we were talking about with the DeFi offerings we could bring to the table, the trust that comes with being a public company that people can audit and have a lot more transparency around, have safeguards in respect to support and security. That flows all the way down into our wallet product. If we create a DEX, like a decentralized exchange service, we will plumb that right into our wallet, right? Just like you see in MetaMask where there's a swap button, you can swap between two different currencies. We can offer that same thing, except behind the scenes, the swap service is using is our own product as well, right? And so by having a focus point of users within a wallet product, we can then expose them to further BCF product offerings, like
without limiting others.
Right. Yep. Exactly.
You're not limiting them. You're not creating a walled garden. You're just exposing them to other services of yours.
Yeah, like they can totally still go out to the greater internet and use whatever swap service they want, but within our wallet, we're exposing them to swap services that we have confidence and transparency around, which is our own. And they can, choose to use that or choose to swap with a different one outside the wallet.
And finally, you touched on this, but maybe we're going to go a little more specific. Could we actually, they say quickly touch also by fluke. Could we quickly touch on how Blockchain Foundry can subsidize the work performed on the Syscoin platform through the community development grant? I think it's important for investors to understand this possibility in video format.
Yeah, I guess it's important to look at the amount of contribution that BCF's done since 2016 on, right? There's probably been a couple $1 million poured into the development of the platform. But on the other hand, I think there's about $7 million of value that's been brought back into the table, and continue revenue coming in from the master nodes, which are validating stakers on the network. So, there's thousands of dollars every month, tens of thousands of dollars every month coming in as revenue, but also a $7 million stake in the currency that continues to grow as we build on top. Furthermore, there's also, the foundation has a war chest now, and so there's grants and incentives to grow the ecosystem. And when that happens, the valuation of what's on our books also continues to grow at the same time. So there's a natural kind of incentive for people to want to bring developers in and other people to come and develop, because of that underlying principle that the token valuation will continue to grow and appreciate if you create that awareness around it. And also the masternode compensation will continue to grow, which is a monthly type of revenue that's being earned.
And that's really interesting because, as Jag mentioned in some of his earlier comments, as Syscoin evolves to a modular blockchain, there is a a new mining paradigm on layer 2 that BCF can participate in and further generate revenue by securing the layer 2 stack. And so that's something we totally plan on doing. And for those who don't know about what masternode governance and stuff is, in a nutshell, if you have 100,000 Syscoin, you can lock it up into a masternode. Every month, there is a certain amount of Syscoin tokens that are sort of up for grabs in the context of decentralized governance. If you go to, is it sysnode.info, I believe is where you can check that, the specifics of this month's governance, like how much is up for grabs and what proposals are being submitted. It's sysnode.info. And basically, there are over 2,100 of these master nodes that have 100,000 sys locked up and off of the markets. And every month, those master nodes come together and vote on what proposals being submitted to the Syscoin governance proposal will get funded. And so what BCF will be doing in the future, and what we've done also in the past, is putting forward a proposal that says, hey, we want to develop more ZK rollup infrastructure for Syscoin, and we want 400,000 Syscoin tokens to do that over the next 6 months. The decentralized group of masternode owners come together and as a group vote on whether they think that investment of governance funds is in the best context.
That's of the entire ecosystem.
Right. And these people already know what BCF has done for Syscoin to date. And so a lot of times those types of things just get immediately voted in. And so that's something that we'll continue to tap as a resource as we continue to invest in Syscoin. And that does help us to subsidize our costs while also growing the value of Syscoin so that the Syscoin we have on our books, further reduces our risk in respect to that investment.
Gentlemen, that's all the questions I've got. And man, we've covered a lot of territory in about an hour and 5 minutes, but fantastic information. I mean, we touched on really all the great parts of the company, all the great product services, road mapping, a little bit of that. And it seems to me that, all systems are go with you guys, and it's fun and exciting to watch where you're going to be in 2022. But I want to leave the last word to you guys, send off the Q&A. Is there anything important that we didn't get a chance to really discuss, or maybe you want to direct people to make sure they're watching out for?
Yeah, I want to tell people to check out lastknown.com and sign up for the newsletter. That's how you can get informed of new features, new artists, new mintings happening on the platform. All of those are revenue generation events for BCF. You'll see more of that on our financial reports for the year. Keep in mind that this year we've spent a significant amount of time, probably the last 3 or 4 months, heads down in a build mode, right? And so we've cut down a lot of our consulting efforts so that we can focus on building and pivoting to product, and that'll have a short-term impact on revenue in a negative way, but also a long-term positive impact on revenue. And so keep that in mind when you're looking at financials for the year, that we've really focused on investing on a product pivot this year. And we're there, as you can see with lastknown.com, and we're getting ready to launch the second artist on the platform February 7th. And so sign up for the newsletter, keep in touch with what's going on there. That platform still has a lot of additional features and functionality to be rolled out. And then there's always AMAs and stuff happening around Last Known artists and things going on there. So it's a really awesome community of creators and NFT collectors that I've enjoyed so far. And I think anybody who's in the NFT space would also enjoy being part of. And then keep an eye on what BCF is doing, like what we're working on with Peregrine, the wallet, Syscoin, DeFi ecosystem products. All of those things are part and parcel of the pivot to product. And so you'll see more news about that as 2022 goes on here. But that's, I think that is going to create a much more sustainable and growing revenue base for the company than the seasonality of consulting can bring. We'll still do consulting, like I said, for large enterprises that can make a difference on the books. And we definitely will have professional services around the products that we're bringing to the market that may have gaps that organizations need functionality in, and we can extend through professional services agreements. But I do think that this direction we're heading with the product pivot is going to be just a huge benefit to BCF overall. And I think that that's going to show itself over time in the revenue numbers that come out.
Coming from someone who's not nearly as well versed in Web3 as you guys, but I've got a pretty good idea of what's going on out there. I think this pivot is ingenious, and whatever short-term cost, of revenue reduction because you're not taking on as much consulting is going to be dwarfed by any single one of these products, let alone a couple of some or all of them and what the value they could bring to the company. So as a shareholder, personally, I'm going to say I love the pivot because, at the end of the day, consulting, a lot of times the consultant, the client doesn't know what they want, and you're fiddling around. Whereas we know the Web3 world is in desperate need of some great products right now. And for you guys to wait doesn't make any sense. So you've taken the horse by the reins and you're producing the product, you're delivering product. And guys, I love it. And can't thank you enough for what you guys did today joining us.
Well, and you hit on a great point there. It's that, you're saying consulting clients don't know what they want. If you think that's bad in traditional consulting, just try it in blockchain consulting. I mean, oh my gosh, it's brain dead, and so we've recognized that and have implemented different strategies for revenue creation through shifting to product to improve the efficiencies in respect to those types of learnings in the blockchain space. I can just tell you from the numbers that have come out of the Capodica and the Carson drop, and we have the Scuja drop coming up. We are generating a lot more revenue now off of these drops than we would off of consulting engagements. And a lot of times we spend a lot.
You get a percentage of the drop, right? Maybe you can't talk about what the percentage is, but you get a healthy percentage of those drops. So Capodica was $4 million in 10 hours.
Yes, we do.
And I know it wasn't just 10 hours because you need some time to put that together, but just that alone. Whatever percentage you're going to take is going to be great.
I can't disclose the percentages, but yes, we do get a percentage. And I can tell you, we also get a percentage of perpetual royalties around every drop that happens on last known. So that is just simple numbers game, right?
That's a revenue stream forever.
Yes.
I mean, imagine if you guys helped drop Bored Ape Yacht Club.
Yep.
And the perpetual revenue you would get from all Bored Ape Yacht sales for the rest for
and George, you know how much additional overhead those perpetual sales cost us? $0.
All cash at the bottom line. No, I think that's why I love the pivot. Consultant's great. I think that was smart. A couple of years ago, 3 years ago, 4 years ago, I think it's a smart way to pay the bills and put some money in the bank. But now that Web3 is on its way, product development, delivering product, I think that's the way to go. And I'm excited, guys. Thanks so much. We could talk for another hour, but I think shareholders are going to say, George, let these guys get back to the rigging the register. Get them off of Zoom. So thanks a lot, guys. Thanks a lot. Jag, thanks a lot for not making me look too bad.
Yeah, no, you did great. Yeah, you did good. You really caught on to everything pretty much.
I did great because you were toying with me like a lion in the Serengeti toying with a little lamb or something like that. But, because I've read some of your tweets and I say, man, it sounds brilliant, but I don't know what he's saying. And I can't figure it out. So thanks for playing nice with me, man. I appreciate that.
No problem.
Thanks for having us on, George.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To both Dan Wasiluk, CEO, and Jag Sidhu, CTO of Blockchain Foundry, trades in Canada under BCFN. For our friends in the US, BLFDF, and Syscoin, their Syscoin that they're a part of, they got a big role there. SYS, go check it out. Go take a look at that as well. Thanks for joining us. Have a great day. See you next time.
Yep.
Hey guys, the video's over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our YouTube channel so you never miss another great Agoracom small cap video.